Hello and welcome back to The Note. Coming to you today on location from the gorgeous campus of Yale University's School of Management, where I'm covering the Future of Finance conference. Now, the question for today is emerging markets. Some people, even in the Financial Times, are suggesting the whole concept of emerging markets is past its sell-by date. Obviously, many emerging markets are locked in a bear market. How can we make money in the emerging markets today? With me now to discuss this is a great person on this topic. She is a veteran of the IFC, now head of Cartica Asset Management, Teresa Barger. Teresa, thanks very much for...
Thank you, John. Yeah, pleasure.
You were part of the team at the IFC that actually came up with the term emerging markets. Does it still have any use as a catch-all term? Does it really make sense to have one asset class called emerging markets?
I really do think that there should be an asset class because there's one great bit of commonality among all the emerging markets, and that is that they have shallow and less well-developed institutional structures. And that fact runs through everything we do in emerging markets. It means we need to do a different kind of due diligence than you have to do in the US. For example, the integrity of the person who is the controlling shareholder of our companies, we really need to be comfortable with that.
Now, how many jurisdictions are there where you can truly behave in the way that an activist investor might behave in the US or in Europe? Is it possible as a minority shareholder to have the same kind of influence that is possible in developed markets?
I think that activism has to be very different in the emerging markets than in the US or Europe. And I start with the fact that 85% of all listed companies in emerging markets are controlled by a controlling shareholder, family, founder, or the state.
As high as 85%?
And only 15% are widely held. Right. And most of those are in South Africa, so that's just a historical artifact. And so when you're dealing with a controlling shareholder, executive pay is not an issue. Families don't tend to pay too much to their executives, including themselves, because their mother won't permit it. And so access to the proxy is not an issue. Am I going to get in a proxy fight with someone who owns 51% of the shares? Who's going to win that fight? It will not be I.
So there are some ways in which there are battles you don't have to fight, and there are other battles that you simply can't win. What can you do?
So I think the first thing we do is look for these controlling shareholders and these families that run their own business very well. They make their product beautifully, but they don't have any experience in international capital markets. And why should they? They never really had to deal with that. So almost every company we come across is sorely lacking in transparency, disclosure, segment reporting, telling their story to the market. Sometimes that is because they have too many lines of business. And so we will say, being a pure play is much more valuable than not being a pure play. Right. So shed some non-core businesses, for example.
So are there any particular jurisdictions where you're finding there really is progress to be made, and are there other jurisdictions where you're finding it's just not possible yet for you to be a truly active investor?
I would say we could work in all jurisdictions, because the main thing for us is that we have trust in that controlling shareholder in no matter what environment they're in. All emerging markets are alike in having okay rules, regulations, laws, and terrible enforcement. Right. Just terrible enforcement. So there's no country that has great enforcement. Sure, there are some countries like Brazil, for example, that have prosecuted some corporate governance misdeeds, and there are others who've prosecuted none. But none of them are great. So we're always going to rely on private contracts, if you will. They're not actual contracts, but on our belief that these people want to do the right thing, and the partnership between us that we can help them do something that they want to do. They want to be more accessible to international investors. They want to have better disclosure. They want to have slimmer structures. They want to be a pure play. All these kinds of things that we can work with them on. So we push on open doors, and if they're not going to play, we don't invest in that company.
Okay. Teresa, thank you very much.